China cuts its 2012 growth forecast, manufacturing in the Eurozone shrinks more than expected, and U.S. futures fall before the open. I'm Chao Deng, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Chao Deng with theStreet. Together, we bring you the morning call. Scott, overnight, China came out and said that it's expecting slower growth this year, something around 7.5%, which is the slowest since 2004. We got weaker manufacturing numbers out of the Eurozone. What are we looking at in terms of market technicals?
Well, put those overseas action you don't want to see weakening. As far as China, it's been the leader the last year or two in growth. So when they announced below 8%, I would say some red flags were raised. Yep. As far as Europe, we kind of know that it's going to slow, but you put it all together, and that put the futures down about 6-7 handles. What I think is important here is short-term market direction for this week. We have not closed below the 10-day moving average in the S&P almost since December 20th. So if you look here at the chart of the S&P, you will see, we have a defined accelerated uptrend that momentum traders have been following this entire time. Okay, we have not breached this 10-day or closed below with any kind of force. So if you look here closer, this is what I'm going to be watching short term to see whether or not we can get back above. We're opening below this 1363 to 1366. If we can't take back this level in the first 30 to 60 minutes, you could see the bears get some confidence and start pushing us lower to this 20-day moving average, which is around 1353. So I'm going to watch this closely on the open. I think we saw some signs last week to take off some risk, so I don't think any momentum traders are all in here. Some are actually leaning a little bit more short.
And last week you did mention that the Russell 2000 was showing some weakness. That's the small cap stocks. What's happening there? What do you expect there for this week?
Well, when the market held in there on Friday, the Russell broke below that upper channel. If you look here at the IWM, which is sometimes a leading indicator, you will see that on the chart here, it broke this upper channel. So you saw this break this upper channel. If you sold some of your stocks saying, you know what, we want Russell to lead us higher, not lower, it was a prudent thing to do. So at that particular point, if you sold some stuff, which we pointed out on Friday, you're coming in and you don't feel as behind the eight ball because you have less stock and maybe you're short. We also pointed out the SMHs, also showing some weakness. The SMHs, put in this little topping pattern almost 2 weeks ago, well before the market, and now it's below the 10-day and the 20-day. So right now we're opening below Friday's low. If we can't get back above, you could see some corrective type of action in the SMHs to about 33, and that would also bring some weakness into the market.
I want to jump into some of the other sectors. What about the financials? Last week we saw Goldman and Sachs break above clear some key resistance levels there. So what are we looking for that this week?
I think the XLF has been something to ride this entire year so far, and we've had some points where you want to be in tier 1, tier 2, tier 3. Finally, last week you saw a clean breakout above 118.50 in Goldman, which was a great trade. Friday you saw a little weakness, so I think that's something to watch for today. First, if I show you the XLF, you will see, because we're going into the sector spotlight right now, that on the chart on the XLF, you'll see there's no real problem yet. You could put it up, you could see here, still above the 10-day, big move since the lows. We could pull it into right around 1477 on the XLF or even 1462 and be fine. But for short-term momentum trading, for me, I'm long a little bit of this Goldman Sachs. I played it for a breakout. It was a nice trade. It came in a little bit on Friday. I'm going to look to buy back around 118.50, somewhere in there. But if we close below 118.50 or 118, that'll be a faulty breakout to me, and then that'll tell me that we should have some more weakness as we move forward. So maybe I'll trade from a more net short position versus net long, which I've been trying to do since December 20th.
And Scott, what about some of the financials, specifically Apple? It was still trading higher last week. So are we getting a bit too extended here?
Well, with technology, with the extension of technology shares with Apple and the Qs, I want to show you two different charts. First things first, if you go to the Qs, you will see that there's been no correction here. This is when it broke out above this major point, and it's followed this accelerated uptrend. So tech has been leading the way. It's above the 10-day, still not giving you any caution. So you could see a small down move, and that's why I'm saying the bulls have been a bit spoiled. That would bring us to about the low here of about 64.03. And for short-term direction today, that's what I'm going to look at Apple. Apple's down a little bit. It hasn't corrected at all ever since this big outside day. So with the small inside range, you could use this as a point of reference. If we start getting below that 542.50, which you could see right in here when I go to this level, you'll see some more weakness in tech. If we break below 542.50 and break this little lower range where you could see the low here is 538, there's no reason why we can't test this 10-day, and that'll also give us some clues that we're going to see some more weakness in the market.
Nice. And what about oil? Last week we actually saw oil trade lower, but however, we could have headlines that could push oil higher. Do you think that that might happen this week?
Well, at any time it feels like they're saying we're going to bomb Iran or Israel's going to bomb Iran. And you heard of President Obama's rhetoric about supporting Israel. It's a little funny, right? In an election year, he's finally coming out and starting to support Israel, but I won't get into that. That's more political. But as far as oil's concerned, we're still correlated to oil. We got weaker when oil failed to break above 110. And right now, if you look at the USOs, you will see that right here, we're a little sloppy. We're still above this prior breakout. We're still above 40. This was when, I remember that day, they talked about the bombing of one of the pipelines. We pushed through, came back below. I got out of my oil because I was long oil then, inside day. So now I would say for oil, watch this low here of 40.10. If you think that we're going to head higher in some kind of crazy bombing, then buy a little bit because you just saved yourself and you bought the pull-in. And as far as the OAHs themselves, still riding what has been a really nice uptrend. For you guys, you got to figure out your commitment to this. Okay, we talked about buying tier 1 right in here, adding here, and then on this last break above 43.80, it's really not holding there. But look at the move we've seen. So if you're not committed to the OAHs for the entire year, if we start breaking and we close below the low here, if you look at my little indicator, that low there is 43.35, you can get flat because you could always buy back at the 50-day, which I do think if we do close below these levels and the weakness persists, you're going to get a test of that, and that'll be fine in the overall uptrend starting back from October.
And talking about looking at the uptrends, housing has actually been significantly strong and continues to hold, right?
The housing, it's been so impressive. We talked about it on Mad Money. It's had such a big move. So correcting a bit would not be so unorthodox. And if you look here as a leading indicator, look at the HGX. You will see that the move here has been so big. You go here, you take a look, and from the low all the way up, I think this is when we talked about it on Mad Money for some more upside right there. And look what it's done since. But right now, it's right underneath the 20-day. It's right underneath the 10-day. Looks like it's breaking a little bit lower. So this, too, could see some short-term weakness. So I would watch this 115 area as a line in the sand to maybe buy some housing stocks, considering from 124 down to 115. That's a nice size move to the downside, and maybe you could buy the dip there. But look at this for some short-term direction as well.
Great. So hopefully that gives you a broad overview of what to look for in the markets. In our next segment, we're going to jump into the social media stocks. How can we not talk about Yelp after its IPO last week? But there wasn't too much intraday action there. So is it worth our time, Scott?
As far as Yelp, as far as a trade, I want to get into it right after this commercial break. We'll be right back.
Thank you.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. Now we will be talking about social media stocks. Thank you very much, Scott. So we're going to talk about Yelp after its IPO last Friday. Had more than 60% pop from its $15 IPO price, right? So not much intraday action there. Do you think it's worth our time?
When we talk about IPOs, you have to really figure out where you are in the food chain. If you got the private placement stock, if you got the IPO stock, yeah, you are happy. You made 60%. If you're trading it in the aftermarket using the art of the first day, it was a horrendous trading IPO. I'm sorry to say. If you look at the 5-minute chart of this stock on Yelp, you will see that it opened up and did nothing. What I do is what I talk about in this type of strategy is this was the opening print, right around 25, 26. Then it pulls in. Okay, once it comes off the low, sometimes you could trade it versus that low. So there was a little bit of money if you bought it around 24 versus the low here. But then once it came back to the recent high, no momentum, pulled in, went back up to the recent high of 25, didn't break above, no momentum, pulled in. So for traders, If it can't get above 25 and stay above 25, it's not worth your time. It's going to need a lot more time to prove that it's worthy to be on your trading plan.
Nice. And Scott, what about LinkedIn? This stock has pulled back slightly recently, but you say you're still long on it, right?
On Friday, I bought a little LinkedIn. I've traded this periodically depending on the setup. And I do think there's one here. It had some pressure because the lockup expired. You know, a lot of guys own this thing from 22 or 32, so they don't care where it is. They just sell it when they could get it free above 90. But if you look at the pattern here, it looks okay. In my opinion, you go to the daily chart of LinkedIn and you will see, here you are. Let's get this a little bit out of the way here. This was the breakout above this downtrend. Nice trade. This is when I started to put this back on my radar. Had a little bit of an outside day there into the 95, so it's pulled back based on the lockup. So right now, I'm long some. I'll put a stop at the low here of 85.25. As long as it holds around 85, I'll stay with it. And if it were to get above this little pivot right here, you know, for momentum and the market doesn't really fall apart, I think you could add above 89. At some point, it might really get going because the guys for Facebook want to get paid and they want to make sure that their valuation doesn't look too lofty compared to this LinkedIn.
Got it. And what to look for today, Zynga, which got downgraded by Morgan Stanley earlier this morning. Last week we saw a huge pop after the company announced that it would essentially let players come onto its website and play Zynga games there instead of on Facebook. So are we looking for a little bit of a pullback after that large move last week?
I think a pullback is in the cards, and I'm still long some, and I don't care. I'd rather have it pull back. Last week we saw some great trading. The stock ignited above 1350. The news of the website added fuel to the fire. So if you took Zynga home on the heavy volume on Thursday, you got paid on Friday. But you have to trade these things. You have to manage the tier size. So if you look here at Zynga, you will see the size of the move that it's had. You know, I'll put this over here. This has been a great trading IPO. I know it got battered and bruised in the first 2 months, but that's why I say unless you get above this opening price of IPO day, you stay away from it. Okay, and here is when it started to look good. So this is the first breakout, and this was above this price here of, what was this, around 1150. You had a nice move up, a little bit of a bull flag, broke above, but look what happened here. Earnings was a disappointment. Came in, retested the prior breakout, and then started to edge up. This is when I started to get back involved. This is when momentum came in, especially when it closed above or it closed near this 1450. But look what happened on Friday. You had a reversal tail. This is an outside day. This is a day to say, take some profits. So now with the Morgan Stanley downgrade, I'm going to look to see if I could buy this stock back right around here. If it does the same type of pattern, perhaps it pulls into about 1350-ish, and then right around this point, it goes again. So at this point, I would just see where this short-term correction takes you, but I don't think that this high is the high of the year for Zynga.
So I'm excited to see what happens there. But Groupon, that story is putting me to sleep a little bit. Is it doing anything for you?
Groupon, about before earnings also, was a good trade when it broke its downtrend. And keep looking at these patterns on these IPOs because they tend to repeat themselves. And if you look here at Groupon, you had a nice trade. I remember talking about it around 2050. It was right here. It started to perk up. I bought through this area. It went to the target because my target was right here. If you guys remember, if you follow us here, this was the target 24 to 25. So on this doji, I took some profit. Plus, it was earnings, and I don't take stocks into earnings. On earnings, it was a disappointment. Open down. It's been just dribbling lower here. Not much going on. I guess if it were to get above 2060, it can get back, some momentum. So I would try some here, but do it versus low here of about $19. So above this level, maybe it gets a little frisky again. I don't think you can get the same type of move that you saw here, but it'll be worth a look versus that area on support around about 19-ish.
Great. And Scott, lastly, I'm curious to hear your thoughts about Renren. That stock or that company reports its earnings this Thursday, right? So what are we looking to do before that?
I know on Thursday I actually took some long because it started to perk up and it looked decent. And then you had that Microsoft news, and it opened up and it just sold. And I hate when stocks do that, so I sold most of mine also. I think I'm actually in flat Ren. So at this point, I think you got to put it on the side. You have to ask yourself a question if you're a long-term investor in Ren, which hasn't been really good, or you're a trader. So as a trader, you really don't need to be involved in this thing. This is when I got long, when it closed pretty strong. It opened above this trend line, but then had absolutely no traction. So for me, that was a sell signal. If it starts to get above this high here of about 680-ish, then perhaps it gets going if there's volume there. But for right now, the action from Friday said, you know what, I'll wait to see what happens after earnings.
And talking about some of these Chinese stocks, Baidu is on our quick hits list this week. What are you looking at it for? What are you looking at for Baidu?
Baidu's been acting better And at this point, it's at a big inflection point. On Friday, it was strong. It's probably going to be down with the futures. So that's a candidate to see if it can go negative to positive for cash flow. If you look here at the chart of Baidu, you will see it's come a long way. It's coming in front of a really big trend line. And typically, when these things get broken, you see some strong action. That's why I always like to watch it. But again, trend lines are there for a reason. They control a trend. So make sure not to cheat too much because it's going to need some power to break through. And I don't know if the China numbers are going to be an impact on Baidu. It probably shouldn't be, but psychological. If we're down today because of China, I doubt that the Chinese internet's going to be a source of strength. So here is a short-term uptrend. It's above the moving averages. I guess if it gets above this area of about 140, 148, it could definitely power through. If we reverse today, Baidu is a candidate. It's on my trading radar for cash flow, negative to positive, and if we do reverse and it shows leadership, that could be a juicy trade there.
What about Wynn Resorts? This stock broke its 200-day moving average last week, so what now?
Wynn, if you remember last week, I started talking about Monday, Tuesday, and then Kramer did an off-the-chart segment on LVS, on Wynn, on the casinos, that there was a juicy trade setting up. And it already went through both my buy prices, and on Friday, I took profits in both. I put it on the Twitter, I put it, the virtual trade floor, where if you're not a member of the virtual trade floor, we do have an interactive, transparent virtual trade floor that goes along all day, so you can see us get in and get out real time. So if you look here real quickly at Wynn, though, this is what I saw there, okay? This is a pattern that we isolated, the small descending channel after the shareholder lawsuit was done. So this was buy one, buy two. It extended to my 130, 135 target that I had out there short term, did it quicker than I thought, so I sold some. So now at this particular point, I want to buy some back, but I do think that we could be a buyer of this thing somewhere around this 124-ish, and this will be an area that I look at. And also LVS real quick. The buyable area on LVS was right here. I outlined this as a nice bull flag, buy above 54, small reversal on Friday, so I got out of my shares also. I think a potential retest maybe of this area will be an area for me to re-enter LVS. I do not think the highs of the year are in on both these stocks, but as a momentum trader, selling into that excitement and the strength into Friday after a 4-day powerful move is definitely the right thing to do and prudent.
And Scott, you're also looking at IBM this week. Where are you looking to add there?
IBM has been lulling me to sleep. We had a really nice breakout like 2 weeks ago when it broke above 195. And for a week or so, it's been holding. If you look here at the chart, I'm still long IBM. This will also be a clue for the day on whether or not we could digest this down open. Beautiful bull flag right here. I'm in some. This was the last breakout. Here is my tier 1, tier 2. Sold back to tier 1 in the strength, and now I'm sitting in tier 1. And if we can get back above 199.29, I will add for some momentum, but the market's going to have to hold in there for this to happen. But this pattern still looks intact and still looks very strong.
And Scott, we can't stop without talking about gold just because of the huge movement last Wednesday. We saw it drop, not a significant bounce on Thursday and Friday. So do you think there's more downside in gold?
At this point, it feels like that potent down move on Wednesday is controlling it. It was harsh, it was fast, it was fierce that Wednesday, and you needed to think quickly. And if you didn't, you had a small window on Thursday to get out when it tried to bounce back. And we said measure the bounce to see what the validity of Wednesday was that took place. So if you look here at the GLD, you will see you had a huge down move on Wednesday. Very fast, stopped everyone out that was using the 10-day and the 20-day. And then on Thursday, small bounce up 2 inside days. I said if it can't get back above this 167.5 to 168, this huge potent move typically leads to another. So at this point, it's opening down today. If you're shorted, because I think guys did get short around 167.5, look to see how this area holds right around here at 164. If you did not get out and you're still long and you're trying to play for a bounce, use this 164 as a short-term stop. That's also the 50-day.
So it seems a little bit risky there. What's the, I guess, the level that we're watching at for the bottom of the gold prices? I was reading a commentary by Mark Arbiter, who's the technical strategist at S&P Capital IQ, and he says that the bottom support is around 1,600 an ounce.
1,600, that's a lot lower. You better measure your commitment if that's the case. If you're looking at 1,600, you go back to this GLD chart, I can't correlate it perfectly. You're going all the way back through this downtrend that actually is trying to hold here. You're looking probably more towards this area, which at this point, a lot of people will be hurt if they're trading long and they don't have an agenda. So this is longer term support and probably still would be fine in the overall pattern, but short term, I would just trade it on the GLD basis versus this 164. And I think that's about 1680 in gold. So it's a short term 1680, longer term 1600.
Okay. 1680, 1600, depending on if you're a short or a long term looking at this.
And your time frame. It's all about your time frame and what you're willing to hold.
Great. Well, thanks so much, Scott. That wraps up today's morning call, and we'll join you tomorrow.
Thanks for tuning in. We'll see you at the recap.